we will be talking about a new chapter, pre-issuance considerations and requirements. Before issuing a documentary credit, what are the pre-issuance considerations and requirements? A documentary credit is chosen as the method of settlement. Documentary credit is chosen as the method of settlement. We said there are 4 methods of settlement. It can be advance payment, it can be open account, it can be documentary collection or documentary credit. So one of the key decisions to be made when a seller and a buyer negotiate a sale contract is selection of the terms of payment. When a documentary credit is chosen, see, this is a very important point, which is the method chosen as the terms of payment. Both the buyer and the seller, buyer is known as the applicant, seller is known as the beneficiary. They receive an independent undertaking in exchange of goods, services or performance for payment. Independent. Comfort provided to both. See, documentary credit, if it is chosen as the method of settlement, if documentary credit is chosen as the method of settlement, there is a comfort provided to both an applicant and a beneficiary. Independent undertaking of a bank is one of the main reasons why a documentary credit is often the preferred method of payment in international trade. So in international trade, documentary credit is the most preferred method. Why? Because the irrevocable undertaking is given by the issuing bank to the beneficiary. So this irrevocable undertaking given, that gives comfort to the beneficiary. It says that it is a very secured method of payment. So, what are the benefits for an applicant? See, as applicant of a documentary credit, the buyer receives an undertaking from the issuing bank that payment will be made to the beneficiary unless the beneficiary is presented the documents as stipulated in the documentary credit. So, whatever documents are stipulated in the documentary credit, unless all the documents are complied with, then issuing bank will not honor. So the applicant is assured that payment will be made or his account will be debited only when all the documents stipulated are complied with all the terms and conditions. So an applicant's mandate to the issuing bank is on this basis. Applicant's mandate to the issuing bank is that issuing bank will debit his account only when all the stipulated documents are presented. That is the mandate. What is the benefit for a beneficiary? As the beneficiary of a documentary credit, seller receives an irrevocable undertaking from an issuing bank. So who is giving irrevocable undertaking? Issuing bank. And separate, if there is a confirming bank, that is a separate undertaking in addition to that of the issuing bank. In the case of a confirmed documentary credit, that it will receive payment. So when the credit issuing bank issues the credit, the applicant risk is removed for a beneficiary. When a confirming bank confirms the credit, the issuing bank payment risk is removed to a beneficiary. So in either case, who is getting the security of payment? Beneficiary. So, next, documents are presented as stipulated. All the terms and conditions of the documentary credit are complied with. An undertaking of an issuing bank or a confirming bank is addressed to whom? Directly to the beneficiary and is legally binding. When an issuing bank or confirming bank effects payment to a beneficiary, it is always on without recourse basis, which means settlement is final. There is no claim. Again, we will not claim from the beneficiary for any refund or repayment. When it is without recourse, issuing bank or confirming bank will not ask for any refund or repayment. Now, in this chapter, what is the most important point we will be talking about is the autonomy of a documentary credit. What is autonomy? See, documentary credits are used in international trade. Why? Because payment is made on the basis of presentation of compliant document. Presentation of compliant document. So, in issuing bank, confirming bank or nominated bank acting on nomination is required to effect settlement only if all the terms of the documentary credit are met. There is no responsibility to assess. See, we are no, as a banker, we are not concerned with the terms of the sale contract. There is no responsibility to assess. That is the main word of autonomy. That is the beauty of autonomy. There is no responsibility to assess whether the terms of the sale contract have been met or not. This is what we mean by autonomy of the documentary credit. So in this chapter, autonomy is very, very important for us to know, and Article 4 comes into the picture. Credit is separate, contract is separate. So this autonomy has been upheld in the courts of many countries. Any party seeking to obtain an injunction preventing a bank from honoring its obligations under a documentary credit will find it difficult. Any party seeking to obtain an injunction preventing a bank from honoring its obligations under a documentary credit will usually find it very difficult to do so. This can be true even when there has been a fraud. The granting of an injunction is appropriate. So the autonomy of a documentary credit is evidenced in UCP 600, Articles 2, 4, 5, 7 and 8. Now what does Article 2 talk about? Definition of credit. Credit means any arrangement, however named or described. However named or described, because there are different types of credits. Irrevocable, revocable, clean credit, standby letter of credit, transferable credit, back-to-back credit, revolving credit, reinstatement credit, red clause, green clause, so many types of credits. So credit means any arrangement, however named or described, that is irrevocable. Thereby constitutes a definite undertaking of the issuing bank to honor a compliant presentation. And what does 4A is? See, all these articles are coming for which word? Autonomy. I am now explaining the articles which are referring autonomy. 4A, a credit by its nature is a separate transaction from the sale or other contract on which it may be based. Banks are in no way concerned with or bound by such contract, even if any reference whatsoever to it is included in the credit. Even if any reference whatsoever to it is included in the credit. A credit by its nature is a separate transaction from the sale or other contract on which it may be based. Banks are in no way concerned with or bound by such contract, even if any reference whatsoever to it is included in the credit. Consequently, the undertaking of a bank to honor, to negotiate, or to fulfill any other obligation under the credit is not subject to claims or defenses by the applicant, resulting from his relationship with the issuing bank or the beneficiary. Applicant is having a relationship with the issuing bank or the beneficiary. A beneficiary can in no case avail itself of the contractual relationship existing between the banks or between the applicant and the issuing bank. Between the applicant and the issuing bank. Even a beneficiary can in no case avail itself of the contractual relationship. So, Article 5. Banks deal with documents, not with goods, services or performance to which the documents may relate. Article 7A, we are taking only part of 7A which is related to autonomy here. Provided that stipulated documents are presented to the nominated bank or issuing bank, and that they constitute a compliant presentation, the issuing bank must honor. If credit is available by side payment, deferred payment, acceptance, all those 5 points. Similarly, I am reading Article 8A in part. Provided that stipulated documents are presented to the confirming bank or to any other nominated bank, and that they constitute a compliant presentation, a confirming bank must honor 5 points. So, Article 8. All these we are talking with autonomy. Now, what is the responsibility of the applicant and beneficiary? What is the responsibility of the applicant and the beneficiary? It is the responsibility of applicant and beneficiary to reflect whatever is the applicable terms and conditions of the sale contract. Terms and conditions of the sale contract, they are to be complied with, evidenced with one or more stipulated documents by means of an incorporation. So whatever it is, it has to be incorporated in the documentary credit application form to ensure that they are added to the terms and conditions of the documentary credit. If all the terms are not complied, then again we have to send an amendment. So the documentary credit application form will stipulate all the documents required, and they have to be indicated in the fields of the LC. They have to be indicated in the field of the LC. The roles, responsibilities involved in using documentary credits. It is important to recognize that although a documentary credit can provide a comfort to both an applicant and a beneficiary, the respective interest risks they face in both documentary credit and online transactions remain different. Risks are different. Interests of them are different, though they give both comfort. See, a cash flow, a beneficiary usually wants to receive payment as soon as possible, while an applicant will normally want to delay payment until the latest position. So the interests differ in 2 key ways. I have just taken with cash flow. The interest of the beneficiary is different, interest of the applicant is different. Interest of the beneficiary is different, interest of the applicant is different. Documents. An applicant wants to ensure that all the documents are received as stipulated in the documentary credit. This is certainly the case because the applicant, he has to sell imported goods. Ultimately, payment depends upon correct documentation. A beneficiary also wants to make sure that all the stipulated documents are presented, because he will be able to get his payment only if all the stipulated documents are presented. That is the beneficiary's interest. A beneficiary will be concerned about the possibility of payment being delayed. If all the documents are not stipulated, payment is delayed. Potential discrepancies that may arise in these documents. So these different interests are reflected in the different risks to which the parties are exposed. KYC and customer due diligence, CDD, these are very important words. KYC, know your customer, and CDD, customer due diligence. Today the principles of know your customer, customer due diligence are very, very important in day-to-day activities of the bank. While opening new account or while giving credit facilities to the bankers, by the bankers to the borrowers. So the all monitoring of a customer's business profile. What is customer due diligence? Monitoring of a customer's business profile. So a bank's KYC procedure should include a process where it is able to obtain sufficient evidence. Client's identity. So the ownership, corporate structure, checking of the data against independent source. In addition, banks will also seek information such as background, geography of the company that is opening the credit. We should know the geography of the company, the range of the business activities, the source of the goods, the frequency of the transaction, the product and service needs, whether documentary credits are to be issued or received, where the funds are coming from, KYC, customer due diligence, ongoing review of the client's business profile, completion of KYC process. Every bank should see that the KYC and customer due diligence are taken care. For example, a company originally imported electrical equipment. Now they are starting importing engineering goods. Immediately as a banker, I should be vigilant. He is importing electrical goods earlier and now engineering material. So, customer due diligence is very important to know the client's business, whether the bank is satisfied with the new commodity that he is importing. And whenever the documentary credit is issued, the applicant's instruction should be taken care. Issuing bank, the advising bank and the confirming bank should also take due diligence, minimum risks undertaken. So bank should also assess any money laundering, terrorist financing, sanction perspectives are there. We should also take into consideration 3 activities: money laundering, terrorist financing and sanction perspectives, in addition to KYC and customer due diligence. Now whenever you are applying for the issuance of a documentary credit, the applicant comes and applies. Whenever he is issuing, it is the buyer's responsibility to request that time when it should be obtained should be detailed in the sale contract. When we should issue the documentary credit, the time is to be recorded. If no date is indicated, a documentary credit should be issued. So it should be in the hands of the beneficiary at the earliest specified shipment. If no date is indicated in the contract, you look at the shipment date. Make sure the documentary credit is in the hands of the beneficiary prior to the earliest date of shipment specified. Very important for issuance of a documentary credit. Beneficiaries often use documentary credits obtained to obtain bank finance. Finance may be necessary. Why beneficiaries require bank finance? Why beneficiaries require bank finance? Because they have to procure the raw material, they have to procure the goods in order to ship. So beneficiary is under no obligation, but he needs finance to ship the goods. Yeah, he needs finance. And legal remedies an applicant and beneficiary may have against each other. Applicant has a responsibility to arrange the documentary credit so that shipment is made in time. Type and nature, terms and conditions of the documentary credit are also very important. Applicant and beneficiary should jointly agree what type of documentary credit is to be opened. They have to jointly agree. Problems that may arise, because if these points are not discussed between the seller and the buyer, later there will be conflicts which arise. So, preliminary considerations are given in our ISBP for completion of any sale contract or completion of the credit or amendment application. Many of the problems at the examination stage can be avoided if these things are taken care of. General conditions, credit facility also we should see whether there is sufficient availability. The main responsibility of an applicant is to complete the application form, and he has to pay on time. They are not actually policing or administering, but they have to take care of the rules and regulations. So when completing the application form, what should an applicant do? Provide the bank with clear instructions, precise instructions, avoiding any ambiguity. Maintain awareness that documents whatever he is importing and whether it is required for his business. Provide details of the type, issuer, and whether one or more documents are required. Specific instructions for issue of documents. And the name or type of the company that should issue. For example, an inspection certificate. Whether you are stating the name of the company along with the standard or quality. Everything is to be taken care. All terms and conditions are complied with according to the sale contract or pro forma invoice. See, these are the basic things that when the applicant gives for opening an documentary credit application, as a banker we should take care of these things. Then only all the fields can be specified. The buyer should complete the application form. Otherwise, all subsequent amendments will be taking place. Then, whether it is on a side basis or usance basis, what is the currency, what is the amount involved, what is the validity period, expiry date, last day for shipment, routing of goods, whether partial shipment is allowed or not allowed, transshipment is allowed or not allowed, what is the unit price, which type of transport document, what is the import term to be considered, other required document, are there any special terms and conditions, who is to pay the respective charges, whether it is to be confirmed or not. Each bank will have its own style of application, whether in a paper form or online. But if it is by MT 700 message, all the fields of the 700 MT should be filled in. So the standard terms and conditions have to be applied and subject to UCP 600. Any insurance, whether it is to be arranged, all these are the points that have to be brought into picture. Any regulations, then the reimbursement instructions have to be very clear. Applicant recognizes that bank is not liable for genuineness, falsification, legal effect of any document. Article 34, whether the applicant is aware of. Applicant agrees to pay all charges and costs designated. All these are in the, whether in the sale contract it is mentioned. All these have to be taken care. Application form when completed, whether it is approved online or site, bank will be known as the issuing bank, issue irrevocable documentary credit, send it to the advising bank, whether it is a paper form or whether it is a site through MT 700. Application form will fill itself. An agreement also we have to take from the bank to debit his account for any payment made to debit his account. So we should remember that applicant is not a party, because once the application form is taken, applicant is not a party to the documentary credit. Once the documentary credit is issued, the issuing bank is a revocable undertaking. So applicant is not a party. Then delivery of the application form to the issuing bank, applicant delivers it with all the details incorporated in the application form. So once the application form is completed, every question should be taken care that it is answered, so that there is no ambiguity in issuing our MT 700 and transmitting it to the advising bank. Otherwise, the beneficiary will enter into a problem that it is not as per the sale contract or pro forma invoice. Again, an amendment has to be said. So make sure that the application form is completed in all respect before we send our MT 700. This is what we have to look in chapter number 6. Thank you.